Thursday, August 1st. We're now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here on Malta. I'm Nicholas Jackman, standing in for Leah Heilpern. Jason Fernandez and Kevin Merku, they'll share their expert opinions with us on today's show after our quick look at some of the market indicators. The cryptocurrency index CCI 30 has been climbing up to settle near the 3,800 point level. The index is down by close to 2% so far in August, but its year-to-date gain measures at more than 70%. The 30-day Bitcoin volatility index stood unchanged yesterday at just slightly more than 5.3%. Volatility has eased back recently as the index retreated from mid-July's level of 7%. Trading activity has increased slightly, and the CoinMarketCap website's 24-hour traded volume indicator stepped above the $50 billion mark, with the Messari website's real 10 volume also increasing, this time to $1.7 billion. The Bitcoin dominance indicator has returned above the 65% mark. All top 5 digital assets show a generally mixed performance. Bitcoin has stabilized near $10,000 after gaining ground yesterday. Ether has retreated after approaching the $220 mark rather early in the session. XRP has given up its gains after trading at more than 32 cents. Litecoin approached that key $100 level as we're just days away from the mining reward halving event. And finally, Bitcoin Cash is virtually unchanged over the past 24 hours as its price hovers over the $320 mark. The Coin360 heat map, it shows a generally mixed performance with plenty of both green and red on this chart. According to the Token Spread website, the Coinbase and XMO exchanges have the biggest price difference for the Bitcoin dollar pair, and it is 0.64%. The biggest spread is posted on the XMO exchange, and it is 0.28%. We'll now take a look at some of the characteristics of MediBlock. According to the project's website, it's a safe and reliable healthcare data platform. With the use of blockchain and latest tech, this platform looks to provide the highest level of security and integrity of data. Some of the benefits include personalized precision medicine, big database prediction of diseases, and medical research. The platform's ERC20 standard MEDEX token hit its all-time high of nearly 1.7 cents in October of last year. As of today, it trades at slightly more than half a cent. Now we'll review the performance of cryptocurrency asset classes as grouped by the Messari website. The infrastructure group is down by less than 1%, this despite both Ether and EOS standing in the green. The media and entertainment category, it's the most bearish asset class today with a decline of 1.4%. The Theta token is providing some bullish momentum there with an increase of close to 10%. The financial sector is a fraction in positive territory as assets showed a mixed performance. The currency category is leaning slightly towards the green side, supported by both Litecoin and Bitcoin. And lastly, the services section shows a decline of 0.5%, even though the top assets are trading higher. And this is where the 5 major cryptocurrency categories stand so far this Thursday. We'll now provide you with a quick overview of some of the most significant moves among the top 100 digital assets, and then we'll be back with our crypto experts after a short break.
world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is BloxLive TV.
And we're back with our crypto experts Kevin Murku, CEO of the Coin Metro Exchange, and Jason Fernandez, COO and co-founder of AE Token. Very happy to have you both on the show, gentlemen.
Thanks, Nicholas. Nice to be here.
Excellent. Kevin, you might lead us off at the start. We're going to talk about price as normal in the start of the discussion. US Fed, they've cut interest rates yesterday for the first time in more than a decade. It's providing us with the first precedent of how this might influence Bitcoin price. Yes, it increased above $10,000 ahead of the monetary policy announcement because it was widely expected. What are your thoughts?
Well, coming from, so most of my trading experience in terms of any market really revolves around FX and the FOMC meeting, and more importantly, the minutes and more or less the perceived, because usually what's perceived to happen, meaning what the rumor is leading up to the announcement, is usually what happens. There's been very few times in history where the rumor is incorrect. And you generally would have this buy the rumor, sell the fact kind of action that happens around the FOC, especially the meeting minutes that are read right after the announcement, which are actually more important, at least for how the market behaves, than the actual announcement itself. So if we're perceiving that there's going to be more and more rate cuts, or perhaps rate cuts for an extended period, or rate hikes, that generally hits the market harder or pushes the market more than the actual announcement itself. So when we talk about correlation to Bitcoin, when it comes to FX as well, retail FX, when it comes to retail-driven products, you don't see that much of a correlation because most of the people that are listening to these announcements and that are actually trading off of these announcements tend to be institutional players. So if I look at the futures market today, I don't see a pattern that's any different than over the last couple of weeks in terms of Bitcoin. That tells me that in terms of institutional traders, or more, let's say, higher level, not low level retail traders, they weren't looking for so much of a correlation either. There definitely was a little bit of a buildup before the announcement, but I mean, you can take that one way or the other. I don't really know how to read into that, to be honest. To me, I don't think that the market is at the point yet where you're going to see any type of true correlation. One, because it's still a very retail-driven market, and second, there really isn't so much of a correlation between cheaper U.S. dollars and the price of Bitcoin. It's a very speculative asset, and it's not the type of asset where someone would move, to a safe haven. It's not a safe haven asset. It's not, unfortunately, doesn't have the reputation yet in many circles that gold does, or in the past, let's say Japanese yen or Swiss franc. These type of assets where people would run to for a safe haven to basically decrease volatility. And I don't think Bitcoin is in that class yet. So I really don't think there's a correlation. There may be a very small correlation inside of the small institutional pockets that exist inside of Bitcoin trading at this point. But to be honest, I think that correlation is close to zero.
Excellent. Jason, could I also find your thoughts on this, please?
Yeah, so I expected it to go a bit higher, honestly. I think it's perhaps a situation where the market is still in a wait and watch mode because of regulation. Also, the US dollar didn't go down as much as expected. And so perhaps basically the news of the price, the price had already been influenced by the news, or the effect had already been priced in to some extent. Also, as Kevin pointed out, I think for that to work, for there to be some sort of correlation, it would have to be seen as a significantly stable store of value, and I guess it's not quite there yet. I don't think it's seen as a store of value. So I think more importantly, there's a whole bunch of rumors about bad regulation coming in. The UK Financial Services Watchdog just recently, a couple of days ago, has warned potential investors that Bitcoin and cryptocurrencies have no intrinsic value. Of course, they haven't quite pointed out where the intrinsic value of fiat currency lies, but they're saying that anyway with regard to Bitcoin, and a lot of people sort of taking this as a prelude to a possible ban, or maybe Britain moving towards a ban. I mean, there's certainly rumors about that. We know that that's been contemplated fairly significantly in India, and we also know that the US has sort of signaled their displeasure. So it's quite possible that some of these factors and the fears against regulation sort of tamp down the excitement.
See you, Jason. Kevin, for you again, July was the first month in the red, or the whole month was basically in the red for Bitcoin after 5 consecutive green months. What's your take on the overall bullish performance that we've seen so far in 2019?
Well, I think if you talk about any markets, generally July, August, they slow down. Mainly, well, the institutional guys are on vacation. Those are the guys that everybody hates because they get 3 to 7 weeks of vacation. Even in the U.S., where generally that's unheard of. So a lot of the big boys are on vacation, and even retail take vacation. Normal people take vacation in the summer, right? So generally, you start to see. It doesn't necessarily mean you see lower volumes that quickly, but generally, people aren't holding positions. So on the institutional side, people will liquidate positions leading up to the summer because they don't want to hold over the volatility. They may still day trade. There may still be obviously bookmaking and market making, but positions are liquidated. So depending on where those positions are liquidated, considering we've been in a bull run or a little, let's say a bull range, or we've been in a bullish market for the past 4 months or so, that means that they're taking profits. So more profits coming off the table because they don't want to hold those indefinitely throughout the summer period because it may get more volatile, and price falls a bit. And now we've been kind of back and forth between this 10,000 level since we hit upwards of 12, almost 13,000. Maybe we got into 13,000, don't remember, last couple of weeks. So I think it's natural. I think it happens in every market. You can look at almost every market. Now, that doesn't mean every asset, but at least overall, considering Bitcoin owns 60+% of the market, it's almost a market in and of itself in terms of crypto. So if you look at any other market, macroly speaking, you're going to see very similar patterns where if you have seen generally prices on the rise, you're probably going to start to see or have already started to see into the summer months where the market kind of stagnates a bit and either pulls back slightly, or if there was lots of short selling going on, you might actually see the market retake some of those old prices as people start to take profits on shorts. So again, I think it's normal. I think it has nothing to do with crypto. It's just general summer month lazy markets.
Lazy markets. Do you think proportionately, Kevin, that there's more bots trading at the moment whilst the humans take holidays?
Yeah, well, there's always a lot of, in mature markets, there's always lots of bots, but bots generally follow what their humans tell them to do in general terms. So still over the summer, a lot of those bots go from being, let's say, speculative or profit-making bots to market-making bots. And they completely change the way they actually enter the market, and they're not looking to hold positions. So even speaking, generally speaking, I think even bots have lazy summers.
Excellent. And next question, we'll go over to yourself, Jason. It's about Charlie Lee. So he's Litecoin's creator, and he's tweeted that just 4 days from now, that Litecoin's reward halving is going to occur. It's going to be reducing from 25 to 12.5 per block. He was tweeting, perhaps just he was mocking the Fed based upon their interest rate announcement. The price of Litecoin, it's down approximately 30% from its year's high. With days away from the halving, what are your expectations on movement, and has movement been in line with your expectations?
Yeah, so Litecoin, I've said this before that I've been impressed about how quickly Litecoin was growing, and I think the main reason that is because Litecoin sort of reinvented themselves as the privacy and security coin. I mean, they pretty much mention privacy and security in every main update that they implemented, including the Mimblewimble implementation, for example. So privacy and security was somewhat of a rebrand for them, and consequently, you know, their price started traveling up, and of course everybody knew that the halving was, you know, happening fairly soon. But I think at some point the price sort of ran away with you know, the fundamentals, and it sort of became a question of people sort of just buying it just purely for speculation. And I think at this point, clearly over the last few weeks, people have sort of realized that what's probably going to end up happening is a massive dump would follow the halving, as in several people are going to dump Litecoin, and that's obviously going to cause. I would assume that it would actually go down, at least in the short term. I mean, certainly the macro reasons. Generally, when you have a halving, obviously it goes up because there's less people. There's less people that are going to want to do mining. Of course, that's the traditional sort of thought. But I think that it's gotten so far left of field at this point, with people sort of speculators getting in, that you're not really going to see a rise, and you're actually going to see a fall. And I think that's already started happening, and I think it's going to be worse when the halving happens and people don't quite see the pop that they expected.
Appreciate it. Just moving that question on to you, Kevin. We're looking at Litecoin. It showed extreme bullishness even before any new bullish trend was confirmed on Bitcoin. We saw 5x gains. You think that was the pricing in of the halving event? What's your expectancy now?
So I think, one, we talked about retail markets, right? We always talk about retail markets here. I do. I don't know if anybody else does, but I like to talk about it. But in terms of retail, Bitcoin definitely has some institutional, let's say, plays, because there's futures. Litecoin has almost none of those. So Litecoin is predominantly, when I say predominantly, it's probably high 90%, if not near 100% retail-driven action, right? So once everyone knows about something, the actual, let's say, effect it has on the market is literally zeroed out. So the only reason, if something like the halving, which obviously in terms of, let's say, when you write it down on paper, it makes sense that, well, there's going to be less supply coming in. If demand is even at the same level, it's obviously going to have to increase in price. That makes sense on paper, but that's because you're just looking at it from one angle, which is the halving is going to reduce the amount of supply. Okay, great. But now that everybody knows that, literally, because it's public knowledge, it's going to lose a lot of the effect that it would have on the market should only, let's say, certain market players be aware that this is going to happen. So I think you have 100% buy the rumor, sell the fact, which is essentially what Jason was describing. People, when they heard about this, even if they didn't quite understand it, started to buy. So, oh, well, everybody's telling me it's going to be worth more. And I think the same thing, that once the halving happens, you may have a little spike right before it happens, day before, hours before, whatever, slight spike from current market price. Not current market prices and where it is right now, but the market price that exists a couple hours or a day before the halving. And then right afterward, it will fall, and it will probably fall by double digits. Because most of those people that have been sitting on their hands thinking that they're going to make maybe another 5x are going to realize that they're not, and they will start to sell, and then fear-based selling will kick in, and all these retail guys will dump their Litecoin. So we'll probably see a significant fall. That doesn't mean that over time, market mechanics will kick in, and we will actually start to see the price again over time because of that dwindling new supply coming into the market.
We'll check in again tomorrow, Kevin and Jason, see if your projections on price drop have materialized. We're going to stay on this halving idea and just discussing Bitcoin and its mining reward halving. It's less than a year away now. I don't know if we can expect a bull run, which seems to be factoring in that like we have at Litecoin. Maybe we'll stick with you on this, Kevin, just on the basis of the trading element. Will the price show similar dynamics as Litecoin? Or is it likely different?
Yeah, very hard to tell. If we were talking about a more mature market with a less of a saturation of ownership, meaning or ownership of market, meaning if Bitcoin was only 10% market share, but it had the same volumes and everything else that it has, it'd be a little bit different. I think I'd look at it a little different way. If we had more and more products we are getting more and more products that are getting more institutional money involved, though I still think it's a relatively small percentage in terms of, obviously there's pockets. Grayscale has famously said that 84% of the people that buy into their products are institutional. But so what? It's 3 billion. 84% of 3 billion is still a very small percentage of the overall 300 billion crypto market, right? So at the end of the day, it's still retail driven. So retail can have the same information twice and make two completely different assumptions and do two completely different trades. So I think because Bitcoin is still the king and it's vastly predominant in terms of liquidity, I don't think we're going to see exactly the same veracity of movement. I mean, I don't think we're going to see 5x and then a flattening and then a two-digit fall, right after the halving. I do think, though, we'll see something similar in terms. I think as we get closer, there will be newcomers into Bitcoin that will buy speculating only based on that halving, and then we will see the price kind of get to a certain level, climax, start to fall a bit, and then a bit of a dump right after. I think generally speaking that kind of that storyline will follow. I just think the levels that we see are going to be vastly different.
Right. And now, following question for you, Jason. LedgerX, they've announced the launch of the Omni platform. It allows users from the US to trade Bitcoin, Bitcoin futures, and options freely. Most of the top headlines are all about LedgerX, and they're beating back to the physical offer, in the offer of physical Bitcoin in the US. Is this extraordinarily significant?
So it could be somewhat significant, at least. So okay, to clarify, they're not obviously the first Bitcoin futures provider. They're just the first to offer physically settled futures. So that means that basically customers actually receive the Bitcoin itself when the contracts expire, and not the cash equivalent. And so that would probably have an effect on the supply of Bitcoin, and then obviously consequently an effect on the price of Bitcoin. So another interesting fact with this particular product is that it's not just that the customers can sort of get it back in Bitcoin, but they can also deposit Bitcoin to trade in the first place. So normally you have cash settled, which is cash in and cash out, but this is sort of Bitcoin in and Bitcoin out. And supposedly this is like the first time a regulated company has been allowed to let customers deposit Bitcoin as collateral for a contract. And so what that means is that customers don't have to wait for like bank transfers or any other limitation, or really have any integration at all with the traditional banking system. They can directly use transfer Bitcoin and sort of transact that way. The interesting thing, though, is the question is whether they've actually launched it in the first place, right? Because some people have questioned the fact is that they've had no official rule filing about approved futures contract, either on the LedgerX website or on the CFTC website. So it hasn't really been announced, and nor has the CFTC showing any futures contract that is certified by LedgerX. There's also no volume listed, which means perhaps it's not live, which is what I'm imagining. So to the extent, if you're not going to report volume, then what kind of a launch is it? It sounds fairly like a vaporware launch. So I mean, these are sort of the issues. I mean, it's somewhat significant if it's indeed true, but I think that we still have to figure out whether people are actually able to use it, whether there's actual volume going through this.
I was slightly surprised too, Jason, as they only actually submitted the application to the CFT back in November of last year, which would be very fast movement for these slow moving structures. The CEO. Yeah, go ahead.
Sorry, I was just going to add that you'd expect that you'd first hear from the CFTC and not LedgerX, right? I mean, you'd first have some sort of press release from the CFTC saying that they've approved this.
The CEO, just in regards to your point on volume, their CEO, Paul Chow, he says it's often what happens is it's about the first trade and then everyone else watches. Maybe they're just waiting for that first trade. We're going to get on to the last question, and that is for you, Kevin. Finally, LedgerX, they've listed a $100,000 Bitcoin call option with a 2020 December expiry. Just to repeat that, $100,000 Bitcoin call option. According to a comment on Twitter, it's trading more than $700 recently, that call option is. It seems overpriced with Bitcoin at just $10,000 today. What's your thoughts, Kevin?
Just to make a comment on the last question that kind of leads into this one, it seems to me that they may have come to some type of agreement with the CFTC for some type of sandbox, because on their website they're allowing in only a certain amount of people, and they require to deposit a certain sum, which would probably elevate them from just a traditional retail client. It looks to me like there might have been some type of sandbox talk that we haven't really heard yet from the CFTC, which is kind of weird, but that's kind of what it looks like to me. In terms of the options, so a call option, for anybody who have never traded options or hasn't read about them, options are you're basically putting up kind of like insurance and saying, look, I'm gonna put this much money up, and if my price is hit, then I'm guaranteed to be able to buy or sell at that price. If it's not hit, you keep this amount of money I'm putting up for insurance, basically. Kind of like when you're playing blackjack. So here you have a call option. That is an option to buy. So this is basically, you're paying $700 to have the option to buy Bitcoin at the expiry date at that stake price, 100,000. So this is you assuming, the person buying this call option is going to assume that Bitcoin will be worth significantly more than 100,000 on that date. And if it is, they will be able to buy at the strike rate at 100,000. So the scenario of a winning call option here would be you put up $700, and on that date in 2020, Bitcoin's worth 145,000. The seller has to sell it to you at 100, and you make a quick turnaround, a quick profit. The other side of that is if Bitcoin's at significantly lower pricing, then the seller gets to keep that $700, and you don't get anything. So I think there's two ways that options are priced, and it's basically using historical volatility and implied volatility. So you look at the historic volatility of the asset, and you look at the implied volatility. How volatile will it be in the future? Considering Bitcoin's history, very volatile. So that's one reason why the option is expensive. It is definitely expensive. You normally won't see an option priced. Usually even 1% of the underlying asset value is usually kind of expensive, depending on obviously let's say the volatility of that asset, like I just talked about. So this is extremely expensive. And again, this is a bet saying Bitcoin will be worth more than 100,000, which is also kind of weird. I would expect to see a put option at 100,000. It probably would have been a little bit cheaper as well. But anyway, that's what they threw out there. So we'll see if anybody buys into it, and it'll be interesting to know who the winner is in 2020.
And we'll keep you all updated here at BloxLive. Jason Fernandez, Kevin Merku, thank you for being with us.
Thank you.
Bye, guys. Great. Before we're going to sign off, I've got a last-minute update in from our editorial staff regarding the crypto market. Total market capitalization is showing no significant moves, but it has edged slightly further above the $270 billion mark. Trading activity has remained virtually unchanged. The CoinMarketCap website's daily volume measures at slightly more than $50 billion. The price of Bitcoin has stayed close to that key $10,000 psychological level. Well, that's all for Thursday's Crypto Now live show. Thank Kevin Merku and Jason Fernandez for their expert analysis. We're thanking you, the audience, for joining us, and invite you all to accompany us every weekday at this same time.